Hello and welcome to SAS TV. I'm Alida Ballard of Surrey Accountancy Services, and in this episode I'm going to explain to you how VAT in the UK works. It's a very basic explanation, so if you need any more information then please don't hesitate to contact us. So there are two scenarios with VAT, one where you have to be registered and one where you choose to be registered. So as a business, if you supply goods or services that count as what is called as taxable supplies, and you turn over more than £77,000 in the previous 12 months, or you think you're going to hit that £77,000, which is the current VAT threshold, then you have to be VAT registered. The other scenario is when you voluntarily register for VAT, and business owners do that when they would like to be able to reclaim the purchase VAT that they've paid, or sometimes they do it just to add credibility to their businesses. So whichever reason that you're VAT registered, most businesses have to account for their VAT using the standard accounting scheme. But there are other schemes available, one which is called cash accounting and another one is flat rate. It depends on, one of those might actually fit your business better, so it would be a good idea for you to talk it through with your accountant and work out what's going to be best for your business. So for the purposes of this video, I'm going to be explaining how standard VAT accounting scheme works, and that's the one where you have quarterly returns that you have to send through to HMRC online now every 3 months. So one of the things that I know lots of people struggle with is trying to work out and remember the difference between net and gross when you're talking about VAT. So that's the first bit I'm going to explain. If you can imagine, before you were VAT registered, you only had one sales figure, and this net represents the net sales figure. So the net sales figure is a figure that you would have billed your clients if you weren't VAT registered. But now you're VAT registered, you do have to add the VAT. So the VAT that you've had to charge at the appropriate percentage gets added to your net sale figure, and what you've got there is a gross figure. I hope that helps. Okay, so now we know that you're VAT registered and you've got some sales and you generate your sales invoice. So what you do is you take your net sale figure, so the figure that you would have charged your client previous to being VAT registered, but now you're VAT registered, you have to add the VAT element. So you add the VAT element onto your net figure, and what you get from there is your sales invoice. Now this sales invoice, the VAT element on your sales invoice is called output VAT, and a good way of remembering that is this sales invoice now goes out of the door to your client. So your sales invoice has gone out of the door and it's made up of your net sale and your output VAT. Now the VAT element of this sales invoice does not belong to you, it belongs to HMRC, and so you owe it to HMRC. So the VAT element of your sales invoice goes into your pot marked VAT I owe HMRC. Okay? And the sales element, or the net sale element of your sales invoice, goes into your pot marked income. I hope that explains it well. Now, if you've got VAT registered suppliers, they would have had to do exactly the same thing. So they would have taken, when they quoted you, they would have said the net value of their sale to you was this amount, and they would say plus VAT. So they would have added their VAT element on this, and they would have sent this out to you. And they would have accounted for this VAT in a similar way to you. They would have taken their VAT element on their sales invoice to you and put it into their pot. Because they've already done that, the VAT on that has already been accounted for. So they send their invoice out to you, but what you get from them is their purchase invoice, is your purchase invoice, which has got their net amount, so to you it's a net purchase. They've added the VAT, so it's in red because it's already been accounted for, and this is your purchase invoice that you've received from your VAT registered supplier. Now, because this VAT element, oh by the way, this is called input VAT because it's come into your door. So the VAT element on this invoice has already been accounted for by your supplier, and so therefore you can claim it back from HMRC. So on this purchase invoice, which is made up of the net amount and the VAT that they have charged you, the VAT element goes into the pot marked VAT I can claim back from HMRC. So that goes in there. And the net purchase element of your purchase invoice that you received will go into one of two pots. One is either the cost of sale pot and the other one is your fixed cost pot. And for any of you who are watching this who aren't quite sure the differences between cost of sale and fixed costs, please watch my previous video, which is about the differences between gross profit and net profit. So, during the course of your 3-month VAT quarter, you keep generating your sales invoices, and because the VAT element of the sales invoices belong to HMRC, you owe it to the HMRC, you keep putting the VAT element of all your sales invoices into the pot, which is I owe VAT to the VAT man. Okay, that's in your quarter. Similarly, you've received all these purchase invoices from your suppliers where they have charged you VAT and you can claim that back. So you keep in that 3-month period, put your VAT that you can claim back into the pot, marked VAT I can claim back. So at the end of your VAT quarter, you add up all the VAT that you owe the VAT man. So let's imagine that each of these cards is £100 worth of VAT that you owe the VAT man. So it's 1, 200, 300, 400, 500, 600, 700, 800. So you owe the VAT man £800, but the VAT man owes you some money. So you need to add up how much they owe you, and again, it's £100 per pot, per little ticket thing. So it's 100, 200, 300, 400. So you owe the VAT man £800. The VAT man owes you £400. So obviously the difference in this case is £400, and that's all that you pay over to the VAT man. Now, in the scenario where you've had more purchase invoices where they've charged you VAT than you've put onto your sales invoices, you've got more to reclaim, the VAT man will pay you back. So I hope that makes sense. I hope that you found that useful, and if you want any more information about VAT or anything else, then please get in touch and we'll be more than happy to help you. Look forward to seeing you again soon. Bye bye.